Good morning and welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We've got a packed agenda covering everything from the Federal Reserve's latest moves to technical analysis across major crypto and equity markets. Eli, let's start with what everyone's talking about, Bitcoin. The digital asset has been under intense scrutiny lately. What's your take?
Thanks, Maya. Yes, Bitcoin is certainly at a critical juncture right now. It's currently trading just above $102,000, sitting near its recent lows and repeatedly testing key support around $98,000. One prominent trader who's been vocal online recently mentioned he still holds $8 million in unrealized profits, but warned of a potential breakdown if we breach that support level for a fourth or fifth time.
That sounds ominous. Let's bring up our first chart visualizing this situation. We're looking at Bitcoin Tether on the daily time frame using the Stochastic Relative Strength Index strategy. Can you walk us through what we're seeing here, Eli?
Absolutely. The Stochastic Relative Strength Index shows bullish momentum building, with both %K and %D lines rising from oversold levels. However, they haven't crossed above the center line yet, so it's not a strong signal. Meanwhile, moving average convergence-divergence remains bearish, confirming the broader downtrend. Average true range indicates decreasing volatility, which often precedes a breakout. But directionally, we're still leaning bearish due to volume drying up and average directional index signaling strong selling pressure.
So while there may be some short-term relief, the overall structure still looks fragile. Shifting gears, another analyst, Rand Neuner, believes the bull run isn't dead despite the recent liquidation event. He noted that traditional top indicators haven't triggered yet. Do you agree with that assessment?
Yes, Rand makes a compelling case. While $19 billion in liquidations certainly shook retail traders, none of the usual signs of a market top have appeared. No spike in YouTube views, no extreme MVRV scores. Institutional dominance seems to be keeping things orderly, though retail players are clearly struggling amid thin liquidity outside major assets.
Let's switch gears and talk about equities for a moment. NVIDIA NVIDIA has seen some sharp moves recently. On the 4-hour time frame using the Trends Your Friend strategy, what does the chart tell us?
Well, NVIDIA is displaying a clear downtrend with lower highs and lower lows. Price dropped from around $202 down to $180, with a significant volume spike confirming the bearish pressure. There's also a bearish order block forming between $198 to $201, which is likely capping any rallies for now. Until price breaks above that zone, the path of least resistance remains to the downside.
Turning to macroeconomic news, the U.S. government shutdown is now the longest in history, causing disruptions in sectors like aviation. How might this affect investor sentiment going forward?
This is definitely adding to the uncertainty. With FAA staffing cuts leading to flight reductions and companies like Amazon announcing white-collar layoffs, investors are getting nervous. These developments suggest economic softness, which could either drive capital into safe haven assets or fuel speculation in risk markets, depending on how policymakers respond.
And speaking of policy, the Supreme Court is reviewing the legality of former President Trump's tariffs. If deemed unconstitutional, as many experts argue, what would that mean for markets?
If the court rules against the administration, it could force a refund of $88 to $100 billion in tariffs collected under questionable authority. That would shake up global trade flows and potentially reduce costs for importers, boosting corporate margins. But politically, it adds another layer of unpredictability heading into uncertain times.
To wrap up, let's touch briefly on precious metals. Are they benefiting from this backdrop of geopolitical tension and monetary uncertainty?
They certainly should be, and we've seen gold inch higher. But interestingly, silver and platinum have lagged. Traders seem to be rotating cautiously, favoring defensive positions, but not rushing headfirst into commodities. We'll need clearer catalysts to see a sustained move.
Thank you, Eli. For our audience watching at home, keep an eye on those key Bitcoin support zones. Watch for any breakouts from consolidation patterns, and stay tuned for updates on the Fed and fiscal developments. Until next time, I'm Maya Keynes. Thanks for joining us.